Alright, how's it going everyone? My name is Amos, and in this video, we're going to be talking about the 60 shares of SCHD that I own and how much dividends it paid me. But more importantly, everyone, including your ex-wife, is turning their backs on SCHD right now, and I'm going to tell you why I'm not. And I might even double down. Right off the bat, let's look at the facts. I bought 60 shares of SCHD on April 7th of 2025 of this year. Now, mind you, I used to be a long-term hater of SCHD since 2019. I used to make fun of it. And now I'm a part of the cult. My average cost basis, $24.35. I still think it's a really good price to buy into SCHD when it's under 25, but even around 26, 27, not the worst price. And how much dividends did it pay me? $15.61 on June the 30th of 2025. And if we annualize that number, I should get about $62 to $63 in dividends for year one of ownership. The best part is, as I acquire more shares of SCHD, because I do plan on buying more, this payout is only going to get bigger and bigger. And this does not take into account the share price appreciation. As you can see on your screen right now, that's 11.9%, just shy of 12%. So my portfolio is in the green with SCHD, and I'm getting dividends paid out. Now I'm going to explain why I think SCHD is still a very superior ETF. And reason number one is the annual dividend increase CAGR. Year over year for the past 5 years, SCHD has been increasing their dividend payout by 11%, meaning the amount of money that you get grew by 11%. Now think about it like this. What other job in the world would give you an 11% raise every year without fail? Sometimes they throw breadcrumbs at you and think you should be happy and feeling grateful for a 2 or even a 3% end of the year raise. With SCHD, the data says 10.8%, if we round up, 11% increase in your dividends. And when you look at the historical data for SCHD, it's just an absolutely beautiful picture. It's growing up and to the right without fail year over year. It's reliable and it keeps up with inflation, meaning if you're relying on SCHD for the income, that 11% increase year over year, it smashes the historical rate of inflation of about 3%. And I would argue that income is pretty darn safe because it does not get cut. It only gets bigger and bigger. And that's why for the purposes of the thumbnail, I wrote SCHD is stable cash flow, high dividends, SCHD. And in terms of the growth itself, quarter over quarter, obviously there's some fluctuations, right? Sometimes it goes up by 24%. Sometimes it only goes up by like 6.9%. And the reason being is that it depends on when they get the dividend payout from their holdings, which takes me to point number 2. When it comes to the stock market, I wear multiple hats to cover up my, receding hairline and bald haircut as an investor, multiple different hats. And I love the fact that SCHD is the poster child for value investing because let's take a look at their holdings. If we scroll up right here, click on holdings. As of right now, there's about $71 billion of assets under management. The overall PE ratio of SCHD, taking into account all the holdings in the companies within the portfolio, is a 15. And this is the breakdown of the sectors and industries that are exposed. Looks like the biggest one is energy at 19%, consumer staples at 18.9%. Consumer staples are the stuff that we need to buy day to day or week over week in order to sustain life. Consumer discretionary, on the other hand, which is 8.2% of the 103 holdings in SCHD, it's stuff that we don't need. It's a luxury. So you can think of it as like buying a new vehicle. When your 7-year-old Honda works just fine, but a part of you is itching to buy that new Ford F-150 pickup truck or getting a new handbag. You don't necessarily need those items to sustain life. And as we scroll down, their number one exposed company as of July the 24th, this fluctuates time to time. Yesterday, when I was deciding whether or not to film this video, the number one was actually Texas Instruments. But I can see now that Texas Instruments is down here at number 12. Number 1 is Chevron, number 2 is ConocoPhillips. So the top two, with approximately 8.5% of the portfolio, oil and gas companies. Number 3 is one of my favorite CPG companies at Pepsi. And then we have 2 pharmaceutical companies, which I'm not the biggest fan of. And then we have Cisco. I am an investor of Cisco. They have another pharmacy. Home Depot, Altria, Verizon. As you can see, these are all stable, blue chip companies operating in the US, a part of the Dow Jones 100 Dividend Index. As a value investor for about 10% of my strategy, I think the other 90% is allocated towards like dividend growth investing and GARP, which is growth at reasonable prices. But jumping back to their holdings, as you take a look at the companies that are represented in the Dow Jones 100 Dividend Index, a lot of them are beat up right now, like Target, like Lockheed Martin and Pepsi. And the reason being is that value investing is out of style right now. Certain sectors and industries go in rotations. They're not always in favor and popular. Right now, the big money has rotated out of value investing stocks like what you see represented on your screen because number 1, they can get a safer yield, a dividend from bonds, money market funds, or even a high yield savings account. But number 2, more importantly, big money has rotated their money out of these types of companies and instead they have put it into the growth and AI hype stocks because that's where the momentum is right now and we're operating in a bull market. And when you take a look at the emotional sentiment that's gearing and driving the stock market, it's overwhelmingly greed. So everyone is just trying to pile their money into what has the momentum, the FOMO, the fear of missing out. These ones right here, the tried and true, the battle tested, the ones with dividend yields of like 3, 4, 5%, they're not really interested, and it makes sense. But to that, I want to say this. The reason why most investors underperform the stock market is that they sell what's underperformed recently, and instead they try to chase and buy into what's hot right now. And the crazy thing is, as they buy and chase that thing, they're usually buying it at its 1-year highest price because they have FOMO. Emotions is what makes investors lose. But how I like to think about it is this. While SCHD, while they're having a rough year where they're only up by 1.5%, that's exactly when I want to buy into them while they're having this down year. Because historical data shows us that over time, they do in fact come out on top of the S&P 500, aka the market, aka the benchmark that most investors try to beat. Because when you take a look at the facts, past 15 years, SCHD's total return, taking into account their share price appreciation plus the dividends paid out, 421%. Your money would have 4x'd. And obviously right now, they're underperforming the S&P 500 because the S&P 500 is propelled and is carrying, like Cam Scatabo from ASU during the bowl game, with Microsoft, Nvidia, Tesla, Google, Apple. They're doing all the heavy lifting and those stocks are not represented in SCHD. However, historically, before like 2022, SCHD did in fact beat the S&P 500 consistently year over year. And what's really funny to me, friends and family, I'm not even trying to come across as condescending or judgmental, but like people beg and ask for a discount in the stock market for something that is high quality. And when the clearance happens and when the deals are right in front of your face, they run out of the store. They're like, I don't want to buy this. This sucks. It's only 1.5% up past 1 year. I want nothing to do with it. Dude, that makes no sense. And between you and me, it doesn't matter if you're old or young. I just think a lot of investors these days, they just lack patience because they see the headlines. And I'm not going to lie to you, sometimes I do have FOMO. But when you see meme stocks go by 100 or 500% overnight, you start to question yourself, like, is my investing strategy sound? But friends and family, you have to reevaluate your risk tolerance. The ones that are able to 1, 2, or 5x their money overnight, they're not showing you the full receipts and details of how they lost all their money multiple times in the past. When you make bets and gambles like that, high rewards come with high risk. If you're not ready to lose it all, then don't even bother trying to entertain the idea of 5xing your money with speculative growth stocks and options. But if you're anything like me, then you prefer the slow and steady path to investing and compounding your wealth in a more moderate, conservative, and in a safe manner. Obviously, in the stock market, there's no such thing as 100% foolproof safe. But SCHD is pretty darn close to that. And so I'll stand by what I said. I think most people lack patience, and they think that every single investment or stock that they own, ETF, it needs to go up in appreciation every single day. And if not, they want to cut ties and think that there's something wrong with it. SCHD right now, they're just having a rough year. If you zoom out and look at the facts and examine what's happening, they're going to do just fine. It's just right now, they're not in favor. They're not what is popular. Which takes me to point number 3, as to why SCHD just makes absolute sense of belonging in my portfolio, and especially their value add to the organization of my portfolio that pays rent to me. Sounds like an HR meeting, I'm sorry, but SCHD, it's not speculative, okay? I don't know what your portfolio looks like, what you're invested into. SCHD, in fact, will not drop by 50 or 70% on a single trading day. Some of your other stocks, they might. MP Materials, Big Bear AI, Open Door, Palantir, volatile. SCHD, on the other hand, reliable, slow and steady. And as we learned earlier, it pays an ideal dividend yield of about 3.5 to 4%. That should help bump up your overall portfolio's dividend yield, especially if you're really heavy and you have a concentrated allocation towards Microsoft, Google, Tesla, Nvidia. Those are more growth-oriented stocks than they are dividend payers. And their dividend yields are usually what, like a 0.25%? So SCHD will come on in and help the dividend yield of your portfolio itself. And I think a really important attribute of SCHD is that they're super rare, because they're perfect for the retired folks that just want a steady cash flow of income every 3 months. But SCHD also makes a lot of sense for dividend growth investors that are still in their working years of their 30s, 40s, 50s, because SCHD will inherently compound the dividends that are paid out at a rate of 10.87% year over year. So I'm not turning my back towards SCHD. As a matter of fact, I'm contemplating on when I should pull the trigger and double down on my 60 shares of SCHD. I want it to be a more holistic number, like 100 shares, probably by the end of the year. Anyways, what do you think? I know, the internet, everyone else, they're hating on SCHD. They're turning their backs on SCHD. They're running towards stuff like yield max ETFs, round hill. They're running towards meme stocks. But I just wanted to be the voice of reason in a sea of haters. Surely I can't be the only one that thinks this way. And if I am, then let me know why I'm wrong in the comments section, because I'm not one of those people that's just like adamant about their perspective and operating in an echo chamber bias. If in fact I am wrong objectively, I'm always open-minded enough to reevaluate, recalibrate, and readjust my strategy going forward, because with investing, you have to adopt a Kaizen mentality, which is a supply chain principle of always improving, continuous improvement. You can't just walk blindsided like, this is what I'm gonna do and that's all I'm gonna do. You always have to be poking holes in your own theory to see whether or not what you're doing makes sense. All that to say, what do you think about SCHD? Anyways, I love you guys. Stay safe. Good luck in the stock market. And if you're feeling it, please hop on over to the Patreon. There's exclusive content up there that never makes its way onto YouTube. I would appreciate it. But if not, I'll see you guys next time. Peace.